What's going on, traders, and welcome back to another YouTube video. So in today's video, we're going to be talking about inconsistencies when it comes to strategy application, right? Now, what does that mean? That may sound like a lot of big words put together or whatever, right? So hopefully by the end of this video, I am able to break it down in a way that you're able to understand exactly what the conversation or what the scope of this video is about, right? So in my last video, I did speak about the where being more important, right? In terms of understanding your bias and so forth. On today's video, we're going to be getting a bit more into that and hopefully leading towards more or less the why, right? The why, as in, why does my strategy work in this scenario, but does not work in this scenario, right? When it is under the assumption that it's created the same pattern, it's reacted to the same level or whatever it is, right? So understanding that is what leads to consistency in terms of seeing profits when you take a trade, right? So hopefully we're going to be spending more time talking about that. Now, currently a lot of focus is put on strategy, and I understand when we talk about strategy, we're talking about the system that you're going to use to approach the marketplace, right? The scope that you're going to look at the market through in order to understand what is happening, right? How does that relate to you in terms of being bullish or bearish in the market, or in terms of looking at a reversal or continuation in the marketplace? How does that now refer to you? Then within that system, how will you navigate that scenario and translate that bullish market into a buy opportunity, or translate that bearish market into a sell opportunity? So that's essentially what a system or a strategy is, right? But when it comes to strategy, we have to focus on one little thing, which is what we call human psychology or emotion, right? So a lot of the times, your trading strategy or system will tell you to buy, right? And you'll find yourself going through the thought process of, okay, do I like this candlestick pattern? Do I like the way this candle is forming? Do I like the momentum, and so forth and so forth and so forth? I understand that these could all be validators or verifiers of whether or not you're right in that scenario, right? But ultimately, this is something that should be encompassed within your trading strategy or within your system. So the less thinking that you do when you take a trade, the higher the chance of your trade being profitable. Now that may not make sense, right? But my thought process is that the thinking should be done before getting into the market. It should not be done in the space of a moving candle, or in the space of a countdown timer or whatever it is. Because what tends to happen is we tend to then make emotional decisions, right? For me, what I'm focusing on in terms of strategy application is understanding more of the why as opposed to understanding the what, right? So the what is or could be a double bottom with a break of the neckline, right? Now, every time I take that trade does not mean that it's going to be successful, or every time I take that trade at a support does not mean it's going to be successful, right? Why? Because we don't understand the why. And now there was a bit of a tongue twister, but yeah, because the why is more important, right? Now, I understand that can be a bit confusing, but follow the thought process. The bias is determined by where something is happening, right? So where something is happening is going to give you a bit of a stronger bias. The where something is happening, if you spend enough time studying that. So for instance, let me make an example, right? So let's say, for instance, okay, we could call this a double bottom, right? We could call this a break of the neckline. We can see price came back in and retested it. So somewhere inside of here would have been a good buy opportunity with that specific trading system, right? But understanding this and taking this trade does not necessarily mean that every time we see this happening on the chart, it's going to be a profitable trade. Now, I understand that no trading strategy is going to do that, right? No trading strategy is going to give you that 100% hit rate. But I believe that when your strategy does not work, there is a driver behind it, right? So if you spend more time understanding, you know, where something is happening, how it happens, what happens thereafter. Is it successful? Is it unsuccessful? You now then need to spend more time understanding that from a scenario basis as opposed to a concept basis, right? It is not the double bottom with the break of the neckline that led to this being a profitable trade, right? It is the fact that it happened in this area. There was a driver behind it happening in that area. So if I spend enough time sort of studying this, I'll be able to get down to the okay, why, right? How do I get down to that? By building a scenario, right? So here's where we start. So what we need to have is we need to know what we're looking for, right? So you're looking for a level of support, you're looking for a liquidity grab, you're looking for market structure, you're looking for moving averages or whatever it is. So ideally, you want to have all of those in one place, right? In the sense that you want to have them grouped together so you know that this is what you're looking for in order to be able to be bullish or bearish in the market, or in order to be able to buy or sell the market. Once you understand that, when you're testing this, this needs to be under a specific set of scenarios, right? So under this scenario here, what do I mean by scenarios? Firstly, a lot of things could be happening, right? You could be seeing a double bottom in a bullish market. That's scenario number one. You could be seeing a double bottom in a bearish market. That's scenario number two. Now, no matter how much time you've spent trading, you have to understand that a double bottom in a bullish market and in a bearish market will give you two different occurrences, right? They may they may be similar, they may react similarly in some instances, but in most instances, it's going to give you different occurrences. Let's get a bit more deeper into that. A double bottom that you see in a reversal scenario and a double bottom you see in a continuation scenario might be different, right? A double bottom that you see at a support that has just been confirmed and a double bottom that you see at a resistance that's just been broken and retested will give you a different occurrence, right? So this is what I mean when I say build scenarios behind the concepts that you're using, because those specific scenarios will then lead towards understanding why something happens. So in this scenario here, what are we seeing? We already have a bullish market, right? Because we're making higher highs, higher lows, higher highs, higher lows. This was the last level of resistance right in there, right? So let's just pull this out. This was the last level of resistance. Price then broke above that, retested it multiple times as a level of support. There we can see our, what can we see in this area? We can now see our double bottom, right? So we have a double bottom here, we have a break of the neckline here, and then we have a retest. So looking at this now, I have already built a scenario, right? I've built the scenario of what? We've got number one, we're looking at a double bottom. So I'll just put that as number one as DB. We're looking at a double bottom under the circumstance of a continuation, right? Because this is a continuation. How do we know this is a continuation? Because the market was trending prior to this double bottom happening. So the market was already trending upwards. We can go further into this and try and understand a bit more about that. But for now, we can see that the market is trending upwards prior to coming into this level of support, right? Prior to forming this double bottom, prior to breaking above this level of resistance. So this is a double bottom that was formed in a continuation scenario, right? Number three, what do we have? We have it at a break and retest, right? So BNR, sorry, break and retest. Let's just put it as that, right? We have it under a break and retest scenario. So if you look at this, why is this a break and retest? Because we can see price formed a level of resistance here. Now, note, I do not trade support and resistance, right? But I just use these things in order to effectively communicate something across to you guys. So we can clearly see here a level of resistance was formed. Price broke above, rejected the resistance multiple times as support, and then continued and created a higher high. So now what do we have? We have a higher high, right? And we have a higher low right there, right? So we've got market structure in this instance also telling us that this is still a bullish market, right? That does not need to form part of our scenario because that has nothing to do. It's not quantitative in a sense, right? You cannot necessarily quantitate a higher low and higher high. So um, this is now a scenario that we can then take back to the charts. So what are we then looking for? When we're testing the double bottom under this specific scenario, right? Why? Because when we understand the effectiveness of the double bottom under this scenario, we can now attribute a level of importance to this setup whenever we see it, right? We can also do what? We can also refine the amount of setups that we would be looking to take, right? So for instance, if we see a double bottom under a reversal, with still a break and retest of the neckline, maybe it might have a 20% success rate in terms of getting a 1-3 or 1-2 or 1-5, whatever your risk to reward ratio is. And then if you see a double bottom under a continuation with a break and retest, maybe it has a 50% success rate. So 50% of the time when this happens, or when this has happened in your back testing, you've seen that, okay, it results in a 1-3 trade, or it results in a 1-5 trade, or whatever the minimum or maximum is, right? Always go for the minimum in your back testing. Always look at the minimum. When you set your expectation of what you're going to expect to materialize out of that setup, if you ever take a trade in that setup, always aim for the minimums of what your back testing has provided, right? So if your back testing has provided, okay, 1-5s, but on average it's a 1-3, then you want to look at that as a 1-3 expectation as opposed to a 1-5. What you can then do is then apply something to be able to extend and look to seek that extra 2R or extra 3R when you're inside of that setup and you've already banked a percentage of your profits, right? Now that comes into your management. So let's not get into that right now. So looking at this now, this might not seem like much, right? But once you begin applying this type of thought process in specifically within your back testing, because that is where most of the work is done when it comes to building your understanding, when it comes to building your confidence in your system, when it comes to building your profitability, your ability to be profitable, building your psychology and all of those things. Ideally, that is what's going to lead more towards it, right? So you have to spend a bit more time in your back testing. And I know it is a strenuous task, right? But when you do it in a targeted manner, when you're back testing, for instance, on a Saturday, you can then spend maybe an hour back testing this under this specific scenario and then provide your data on that. You then create a new scenario, maybe a double top under a continuation with a break and retest, or a double top under a reversal without the break and retest, right? Without that, with a, let's say, a defined level of support or break of market structure or whatever, right? This is now when you start messing around with these things. So if you now back test this scenario and you see that, okay, this is not really that highly profitable, right? You can still keep that as data that you can use in the future, right? But you can then move on to other scenarios. So what if I see a double bottom, right? And then maybe there's a liquidity grab, right? So let's say there's a liquidity grab. That could be another scenario, right? So basically what I'm talking about in here is understanding that the scenario under which something happens, right, is most likely going to lead to you understanding why it's going to be profitable and why it's not. And when you get to that point where you can understand why you lost a trade, you're going to see a dynamic move in terms of your profitability, because now you've put in that sort of filter into yourself and you know what your setup looks like, right? Now for me, I've got concepts where I can identify this low before it happens. I can identify this high before it happens. All of these levels in here. If you're part of my mentorship, we've spoken about these levels way before they happened, even this one, right? So all of these swing points, we have concepts to identify those. Does that mean that I need to trade it, right? Maybe, maybe not. But for me, I wouldn't be looking to get in at that point, regardless of me having concepts to be able to identify that. Why? Because when it came to backtesting, when it came to filtering out what is a high probability setup and what isn't, how it happens, why it happens, being able to filter out where would you be able to trade that from a risk management perspective, I was able to filter these specific setups out, right? So for me, it is inconsistent in its results, right? Being able to take such a setup. So when you do your back testing and you understand those scenarios under which your strategy is successful or profitable, you'll find yourself having a higher level of confidence, number one. And number two, you'll find yourself taking much better quality trades. Now, I hope this video was very informative. If you do have any questions, ensure to drop it down into the comments or hit me up if you do have access, right? And we'll be sure to get back to you on that. Until the next video, it has been a pleasure as always to share with you guys. And I am wishing you a blessed and a profitable trading week.